What is going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. Today, we're going to talk about the market and the current situation of the market. We're also going to talk about key levels for the S&P 500, along with some opportunities that you may be able to take on during the uncertainty that our world and our political and economic system are going through. So first of all, let's go ahead and address the current state of the markets and the current levels in which the S&P 500 or SPY closed at. We use SPY ETF to track the S&P 500 ETF, and this, as you could see, ended the day near the 420 level in which we tested during the correction that happened in the beginning of the year on January. So a correction is anywhere between 15 to 20%. Some would argue 10 to 15%. We can see that we dropped about 10 to 15% on our first decline from the highs of 480. And we came down to 420, in which we're visiting once again, and we're visiting that level with strong volume based on the news of Russia's invasion into Ukraine. So anytime there's war in history, it shows that markets tend to come down about 15%, and here we have the exact amount lost from the market's highs since November till now. During this decline, we saw some things go up, and these are things that we have been mentioning for quite a while, and we have been mentioning as to be a good hedge against a market that is overpriced. So one of the biggest arguments that we saw in the last couple of years is the pricing and the valuation of some stocks. Some stocks being like Roku, some stocks being like Tesla. These are companies in which were overpriced in the previous markets, years of trading. And so during these times, we saw gold and silver hold back, and this is a time in which we're starting to see gold and silver moving up. So in the last couple of months, we mentioned the importance of gold as a hedge against a market decline. Now, typically gold would act as a market hedge. A hedge is something that, institutions would buy in order to protect them against a decline in another asset. So, for example, when major markets go down or when inflation goes up, meaning the dollar value goes down, we see gold go up. Now, in the last 2 years, gold has been pretty flat. We haven't seen it go up or down much. It's been stuck in the same kind of, it's been stuck in the same range. However, in the last couple weeks only, we saw gold have a significant increase since the beginning of this year in January. This is because in the last 2 years, Bitcoin became a major disruptor in the inflation hedge approach. So if we look at Bitcoin in the last 2 years, we see that Bitcoin has been trading significantly in a bullish manner until in the beginning of this year, in which we saw uncertainty about more inflation and we saw uncertainty coming from Russia. Now, when we're talking about Russia in times of war, a safe haven investment will always resort back to precious metals. At times, we will see during market history, different things and different assets will be introduced. For us, it's the crypto market asset that took over as an inflationary measure and built what we call castles in the sky. This is a term that investors use for a asset class having a high value but no underlying fundamental strength. And the fundamental strength comes from actual financial returns, and these financial returns are going to be things like a balance sheet for a normal company. And so these things like cryptocurrency, which of course I'm a big supporter of. However, long-term investors and institutional investors are going to start looking at them as a higher risk asset class when it comes to times of uncertainty and times of war and times of higher inflation. So what is flat will eventually break out as long as it actually has fundamental value that grows, especially when the quantity is limited. And here we have gold and silver acting as those key roles. we can see that gold and silver are both pushing higher in the last few weeks as a hedge against the potential war that we're going into. Now we're starting to see aluminum becoming a more hot topic also because Russia is a major distributor of aluminum, and they're predicting that there's going to be a global crunch in the supply chain of metals like aluminum. Therefore, that's another opportunity in which you could be looking at other than gold and silver that could potentially be moving higher. Last but not least, we also have oil. We've already mentioned how much oil companies are benefiting from this invasion. Unfortunately, there are beneficiaries of an invasion, and this happens to be oil companies. Oil companies are also going to be a major winner in times because, of course, oil prices are soaring and these companies are profiting more and more. So other than looking at major markets, which is the problem that we're seeing in markets right now, so many traders are stuck in their old ways. They're looking at your Teslas, they're looking at your Rokus, they're looking at your Neos, and not to say that some of these companies are not great long-term investments, but in reality, you have to follow the capital. And one thing about Wall Street is they like to always make money on bull runs, and bull runs aren't always happening in major tech companies. Sometimes the capital will rotate into something like gold, which is why it's always a good idea to check which asset classes are seeing the most gain, whether it's commodities or precious metals, and then you're able to capitalize on those gains. One thing that traders need to understand, especially about precious metals and oil, is that they tend to move slower than tech stocks. So their breakouts are not going to be as robust. So they're not going to be as fun to trade, but they are going to still give you a good, solid return during times of uncertainty. These are things that you need to especially pay attention to during times of uncertainty. So navigating the market right now, the best approach is not holding. If you are planning on trading major caps, learn how to play puts, learn how to short your positions. You can make a lot of money on the way down just the way you do on the way up. All it takes is learning some trends that will lead into a bearish pattern, because the way the market is projected to head in the next 24 months is as the Feds raise interest rates, we're going to see a very seesaw-like market. We're going to be jumping up and down. And when we're jumping up and down, you don't want to hold trades for too long, especially if you're an option trader. We've been taking advantage of overnight trades and intraday trades. And then you also want to learn to trade both sides. And finally, you want to figure out where the bullish money is going, because if money is coming out of one place, Wall Street is putting it into another. In this case, we're seeing SPY come down and gold move up. As you can see, it's a perfect inverse pattern that is going on, and this is something that you need to pay attention to now. And if you think that you've already missed it now, don't worry, we'll see more and more times like this in the future of the market, decades to come, and you'll be able to take advantage of these things at that time. Either way, guys, thank you so much for checking in. This was my midweek check-in. I hope it helped everybody, and thanks again.